Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. So one of the charts that I've seen going around on the internet over the past couple of weeks is this one. And what it essentially shows is the SP 500 right here against an advanced decline line. Now the advanced decline line is an indicator of underlying market strength. It tells you the number of stocks that are participating in a rally. And you can see it predicted the 2022 bear market right here. You can see the market was moving higher as the advanced decline line was actually showing weakness heading into that January 2022 top. And what this chart is showing right now is that this advanced decline line has made a lower low here in December while the market is still trading higher. So the question is, does this indicator have any use? Should we be paying attention to this chart? That's exactly what I'm going to be addressing in this video, trying to be as objective as possible when looking at the advanced decline line and what it's telling us about the market today. By the way, if you are new to this channel, don't forget to click on that subscribe button. And if you enjoy this video, don't forget to smash the like button as hard as you can. Now, without further ado, let's get right into it. So there's many ways to look at the advanced decline line. There's pretty much advanced decline lines for every index that's out there. So when we look at this indicator, we look at the developments that are happening on it. We have to be clear as to what we're looking at. What index are we looking at? And you can see here the NASDAQ composite that is purely made up of technology stocks. Well, you can see that while the NASDAQ did not make a lower low than the one we had in October, well, the advanced decline line did, right? So that is showing us that yes, the advanced decline line is suggesting there's underlying weakness in technology stocks as it makes that lower low. That is quite concerning for the NASDAQ composite. But what's very interesting is that if we look at the S&P 500, we look at the advanced decline line right here. Well, we can see that the advanced decline line has not made a lower low, right? So that is not showing underlying weakness. In fact, the advanced decline line has made a higher high relative to the high that we had in December. You can see that the market is now at 4,000 points relative to 4,100 points back in December. So the market itself is lower than it was in December, yet the advanced decline line is higher. And you can see, we can see it even better on this chart right here of the NYSE advanced decline line. The advanced decline line just skyrocketing higher while the market is still at a lower high than where it was in December, right? So the advanced decline line really showing a lot of strength on this recent move, even though the market is not particularly much higher. So the question is this actually a useful indicator? Is this actually telling us anything about the market right now? Just like the advanced decline line was telling us very important things back here in late 2021, as the market was moving higher towards its all-time high, but the advanced decline line was clearly showing a lot of underlying weakness in the market and essentially called the fact that the market was making a significant top right here. So we're going to go back over the corrections and bear markets that we've had over the past 25 years and try and understand what this means for the market looking forward and trying to be as objective about this as possible. In 2020, we did not see any divergence with the advanced decline line. The advanced decline line really did not show any big signals here in 2020. The only signal I could spot right here was in June of 2020, where the advanced decline line, you can see, made a higher high relative to February of 2020. You can see advanced decline line making a higher high while the market was still lower. So that was telling you that the market could see more strength ahead. So that was the advanced decline line telling you that the market underneath the surface was even stronger than where the price was currently at. So that's interesting. Now let's skip over to 2019. You can see very interesting. Leading up to this top, the market was grinding higher. And look at what the advanced decline line is doing here. It's moving lower. So again, very similar to 2021, where you had the market go higher, advanced decline line move lower. Well, you kind of had the same thing happen in 2019, market moving higher. Advanced decline line predicted that there was going to be weakness in the rest of 2018. And now you can see every lower high in the market right there was confirmed by a lower high in the advanced decline line. So what we have today is very different because the market, yes, it's making a lower high, but that's not being confirmed by the advanced decline line. So you can see here as the market moves down, the advanced decline line confirms that, and then you can see what happens here. Fascinating development here in January. You can see, look at where the advanced decline line is right there towards the end of January of 2019. Well, the advanced decline line has taken out those highs you can see right here, but the price hasn't yet. So that's quite similar to what we have today in the sense that price has not yet taken out the highs, but the advanced decline line is showing that there is enough strength in the market to potentially push it higher. Now let's move back to 2015 because that's also very interesting. The market kind of grinding sideways, making slight higher highs here. Advanced decline line telling you, nope, we're going down. In fact, the market did go down. Right here, towards the end of 2015, you kind of had this recovery right here. But the advanced decline line, it was not skyrocketing here. It was clearly telling you there was underlying weakness in the market. And in fact, the market did fail to continue moving higher and did correct once more. Then look at what happens in 2016 right here. Advanced decline line taking out those previous highs. You can see here it's higher than where it was in 2015, and yet look at where the price is. It's still lower. It hasn't yet taken out those highs. So again, advanced decline line predicted the correction. It predicted the second correction, and it also told you that this recovery was the real deal and that there was going to be more strength. So far the corrections, and of course this is all biased because we're just looking at the bull run for now. We're looking at a period of easy monetary policy where the Fed was supporting the market, not trying to fight inflation, really trying to stimulate growth. So a very different type of environment to today. But nonetheless, if we look at this very objectively, the advanced decline line did give us a lot of insights. Now let's go back a little bit further to 2011 right here. And 2011, it's interesting, there's absolutely nothing to conclude from it. There was no divergence at any moment in 2011, except here you can see in 2012, well, the market is still lower than where it was at the beginning of 2011, right? It hasn't taken out those highs yet, but the advanced decline line, look at where it is. It's making higher highs. So that is telling you that this recovery right here is showing a lot of strength underneath the surface. So that's pretty interesting so far. We've looked at some of the corrections throughout the bull run, but now let's look at the bear markets, most notably 2008 and 2000. 2008, the global financial crisis, and 2000, the dot-com bust. I think we need to include these periods in our analysis when looking at indicators at the very least. Ideally, you want to include the 1970s and 1980s as well because you had a lot of inflation here. But in this video, we're just going to look at the two other bear markets, and that is these two right here. By the way, if you're so far enjoying this video, don't forget to drop us a like. It makes a massive difference. Now, 2008 is very interesting. You can see here the market making the final all-time high in October of 2007. Look at what the advanced decline line is doing right there in blue at the bottom. Well, it's making a lower high. So advanced decline line beautifully predicting the top of the bull market in 2007. And you can see here, look at this, every time there's a lower high in the market, right, that black line making a lower high, well, that's confirmed by the advanced decline line. Confirmed. In this bull trap here that we had towards the beginning of 2008, price stayed lower than this high and the advanced decline line stayed lower than this high. Then again here in this brief rally, advanced decline line was pretty much flat throughout that entire period. So again, confirming the lower high that's being made on the market. Again, here in November of 2008, advanced decline line confirming the lower high, telling you there's more weakness ahead. So almost throughout the entire bear market in 2008, you never had the advanced decline line showing strength, right? So that's very interesting because we can officially say that this is not something that we ever saw in the 2008 financial crisis. The fact that the advanced decline line is moving higher here is different to what we had in 2008, except at this moment right here. And this is really the exception to the rule. You can see here January of 2009, right there, advanced decline line made a higher high relative to this high while the price still made a lower high. So this, on the other hand, to be fair, was towards the end of the bear market, and it was at the moment where the market was starting to bottom out and really show bottoming type of price action. But you did see this positive signal from the advanced decline line right before the market plummeted, I believe, another 20% from that moment on. But then look at what happened here throughout this period in 2009. You can see here, first of all, in May, right here, May of 2009, look at what's happening to the advanced decline line. It's taking out that high right here while the market is still below that previous high. So showing you there's a lot of underlying strength in the market. And then again, you can see what was happening right here in 2010. Look at where the advanced decline line is. It's above the high we had in 2007, showing you there's a lot of strength in this initial first leg of the bull run. And that was, of course, fueled by a massive move over the years that followed. So I would say, although there are some exceptions, that what we're seeing here on the advanced decline line over the past few days is a positive development signaling that there's underlying strength in the market. Of course, that's just our opinion, but although objectively we are seeing underlying strength, inflation has broken out of a 40-year downtrend that fueled the bull run that we saw since 1982. We've seen one of the most aggressive tightening cycles in history, with the yield curve more inverted than anything we've seen in the last 40 years. We are in extreme, uncertain market conditions. Our mission is to help investors through the emotional roller coaster of investing, making sure people have access to the right research to pick the best assets for the current market environment. Now, we know that you don't have the time to read multi-page quantitative reports on monetary policy. So our entire service is designed for you to absorb the key points quickly, understand what the best bets are, what the key entry and exit points are, and of course, why these bets and these levels offer the best risk reward. Now, if you think that's a service that you'd be interested in, grab a free trial by clicking on the link down below and join our community. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. In the meantime, I wish you good luck on your trading and see you next time.